Good afternoon, everyone. The time has now ticked over at 12:30 p.m, so we will start with today's Novatti investor briefing. My name is Alfred. I'm part of the investor relations team at Novatti and will assist with running today's call. We're joined today by Novatti CEO Peter Cook, who will provide an overview of the December quarter and then open the floor to questions from investors and analysts. Throughout the presentation, if you do have any questions, Peter, please type them into your Q&A box on the bottom of your screen. It's a little speech bubble with a question mark. If you're on a smart device, you just have a Q&A button at the bottom, and we'll just read the questions out after the brief presentation. I know many of you are very much looking forward to hearing from Peter. It is a very busy day on the ASX, so Peter, I won't take up any more of your time.
Okay, thanks, Alfred. If we can go straight to the highlights page. So good afternoon all, and look, it's been a very, very big quarter for the company. And so starting with some absolute highlights, we got our bank license in early November, we launched our stablecoin service in early November, and we have really been able to start to accelerate on the acquiring business. And then, you know, since the start of this calendar year, we've been awarded a major government grant for the Pay by Crypto project. So in terms of activity of the business and really setting it for the future, a lot of activity and a lot of highlights. Looking at numbers, $9.3 million of revenue last quarter. That is up 60% year on year. It is a slight decline on the prior quarter and the quarter before that, and I'll address that later on. A big achievement for us is our gross transaction value exceeded $1 billion for the first time in the quarter, and really again reflects the growth in our acquiring business. Our gross transaction value is up 83% year on year, and if you look at, say, the acquiring business, it's up 13 times revenue on a quarterly basis year on year. And then most importantly, in the market that we're in at the moment, where access to capital is tight and is really driving the behaviour of a lot of technology companies around the world, across the group at the end of December, we had $25 million of available cash resources. So just going back to nearly as a reminder, what does our business do? Where do we play? We are a B2B payments business. We enable businesses to pay and be paid, and really to be part of the whole thematic of digital transformation, and in particular digital transformation of financial services. And we are increasingly becoming a major player in Australia in particular, in areas such as acquiring, issuing and cross-border payments. So looking at the December quarter performance, as I said, a slight decline in revenue, but in fact up significantly on a year-on-year basis. The decline in revenue is to some extent related to a strategic partner where there has been a margin shift. The actual gross transaction value has been going up, but we've had a margin shift, and it will take about 6 to 9 months for that growth to overcome the drop in revenue. And then also within our ATX business, given their government cycle, we've essentially missed a contract last quarter that should evidence this quarter. I think that the real thing to say, though, is that our full expectation is that we will accelerate on revenue growth starting this quarter again. In terms of driving towards positive cash flow, we are really in control of our expenses. We are managing our cost side strongly, whether it be on the labour side or general expenses, and we are fully driving towards a cash flow positive situation. The balance sheet, in terms of available cash, we have a very strong cash position and are fully funded to positive cash flow. Looking at the underlying business, and in particular the core business lines of acquiring, issuing, cross-border payments, we are getting strong growth in all of those areas. Acquiring is a business line that we have invested in very strongly over the last 2 years. We have took us a significant amount of work to get our acquiring licenses from Visa, MasterCard, American Express, Union Pay, Alipay, WeChat Pay, and so forth. We have deployed a full acquiring stack or solution, which will enable us to bring clients onto our own acquiring platform and derive very strong margins. So right now, what's happening in the acquiring business is that we're getting very strong growth in our numbers of merchants and clients, and we're also increasingly bringing on existing merchants onto our own platform where we get much higher margins. So the acquiring business will get revenue growth and very strong margin and contribution growth. Our issuing business also getting strong growth in terms of number of cardholders, number of programs that we're managing, and the amount of funds that are being spent through our card programs, both in Australia and New Zealand. The achievement that many have been waiting for, which has obviously taken a number of years, is getting the license for the International Bank of Australia. We have been awarded a restricted ADI or restricted bank license by the regulator APRA. Essentially, we have 2 years to convert that to a full license. We are under a program of works at the moment where we're rolling out our technology. We expect to have our first clients doing transactions within about a 6-month period, and that's really early stage family and friends type clients where we show the regulator the deployment of our technology and the products that we have analysed and then are bringing to market. We, in parallel, are doing further works to apply for the full licence, and it is our aim to have that in a shorter period as possible, but certainly within 12 to 15 months of getting the restricted licence is our aim. The bank in particular has recently hired a chief risk officer, and in terms of long-term business development and lining up the sources of revenue for the bank, we have undertaken extensive conversations with other payments companies and then international sources of whether it be migrants, students, whatever, but sources of business for our business plan. We are well into the business development cycle for that. Looking at acquiring as a particular business unit, we've initially launched with what you'd call card not present services. So that is where someone can go to an e-commerce website and make a payment where their card is not physically present. We've also integrated to a major network run by a company called DataMesh, and that enables us to do card present services, so essentially in-store payments. We've also spent a lot of time developing what we would call embedded payments, where we are integrating with companies to their back-end ERP or accounting system, where it's essentially a payment that's taken in the process of their business flows, but reconciling straight to their back end. So by example, an accommodation provider, someone pays their bill for their weekly or monthly accommodation. It's done by a credit card, either card not present or card present, reconcile straight to the back end accounting system, which is a productivity saving for our client. And those sorts of embedded payments we're really getting strong growth from. And those services are available both in Australia and New Zealand, with the full rollout of card present services due in late February. We've also integrated with an international service called Riskified, where we can essentially give a chargeback guarantee to our merchants, and that cuts the fraud rates and, let's call it, the problem clients, and enables a higher take-up of card services and greater payments. So we are really bringing to bear a very deep roadmap of services, which is what's enabling the acquiring business to grow so strongly. So looking forward, what I'd like to leave everyone with is absolutely the two major aims of the company and the board. One is that we absolutely shift to positive cash flow, and there are extensive steps being taken within the business to do that. Obviously at one level driving contribution from the business units, whether it be through increased revenue, increased prices, reduced cost of goods, or reductions in the expense line. So very strong drive towards positive cash flow. We are very, very well funded, so we've got a very strong balance sheet to enable us to get to cash flow positive. At the same time, we are really focused as a business on leveraging our existing investments in technology and services. We've spent many years deploying issuing services, acquiring services, cross-border payments, getting a bank license, launching immersion in the US, driving these different capabilities and services, building infrastructure. The entire focus of the business now is to leverage that, monetize those services, and then drive bottom line performance for our shareholders. So just to reiterate, looking forward, the company is focused on shifting to positive cash flow and leveraging our existing investment in the infrastructure and services that we've spent time bringing to market. And with that, Alfred, I'm happy to take questions if you'll moderate those.
Thanks, Peter. We have had a few questions come through.
Yeah.
I've got a bit of an okay. Yeah. No, I think it's still coming through. You might just need to mute your speaker. Let me try that.
Yeah, let's keep going. Yep.
Peter, we've had a few questions come through about the bank. I'm just going to merge Richard, Joe, and Andrew's question together. When are we expecting the banking business to be live and running?
Okay, so that falls into two parts. One is that we, within about, I'd say about 4 to 5 months from now, expect to have our first services in market, but they are, let's call it, at a family and friends level. So they're not truly commercial. We will then develop those services, get our full license, and then deploy those services in a full commercial way.
Peter, a follow-up from that from Paul. You mentioned lower costs due to the bank launching. Can you please explain?
Yeah, so as a group, we're essentially now, you could say, running two different businesses. One is Novatti as a payments company, and the other is the subsidiary that is a bank, of which we own 91%. In the 4C report, our finances are consolidated. So if you look at the balance sheet, there's $25.7 million on the balance sheet of cash. A bit over 7 million of that is with the bank. So notionally $18 million plus or minus is available to Novatti as a payments business. On the expenditure side, the expenditure within the quarter splits between, I think it's about $2.4 or $5 million. The 1.6, sorry, that's on the burn rate. About 1.6 is from the payments business, and the balance, about $800,000 is from the banking business.
Thanks, Peter. Question from William. Could you please elaborate in greater detail on how the banking license will enable the payments platform for Novatti growth? What are key milestones for the bank in 2023?
Yeah. So if you look forward, Novatti will be a customer of the bank. So many of the banking services that we procure now from other banks will be sourced from the International Bank of Australia. That will have a very significant positive cost impact for Novatti. So our costs will drop significantly by being a client of International Bank of Australia, which will tailor some of its services towards payment companies such as Novatti. So Novatti will be an example client of the bank, but we would expect many other fintechs, payment companies, and even other banks, and in particular international banks for services such as correspondent banking, would see the International Bank of Australia as a good source of their banking services.
Question from Stephen: is acquiring getting traction with new customers in market, or is this existing customers doing bigger volumes?
It's Stephen, it's primarily new customers, but you do get growth in what's called the back book. And an interesting thing, it's a small effect, but with inflation at the moment, as our merchants put their prices up, then effectively we're processing more as well. And we've seen with some of our merchants, as they use us for, maybe one or two of their websites, they bring on more websites or more accommodation venues, or in some cases we've extended our services to New Zealand for them. But the bulk of the business is coming from new clients.
Thanks, Peter.
And just related to that, we're getting a lot of cross-selling between our issuing and cross-border payments business units and our acquiring business. So actually, I'll say the theory of providing multiple services to market is enabling cross-sell within the business.
Thanks, Peter. Just going to combine a few questions about the stablecoin from Glenn and Robert. Now that some of the majors have launched their own versions of the stablecoin, does this represent a threat, or does it simply reflect a growing market? And are you concerned about volatility in the space at the moment?
So let me start on volatility. We are running a stable coin which is 100% fiat backed. So if you will, it's a token or a representation of a real Australian dollar. So prima facie, there should be no volatility. It's not a crypto asset that people are essentially speculating on. So it is a representation of a dollar, and so we don't expect that sort of volatility should exist. What we have built is a service for utility. Now, the obvious utility, or the first utilities for stablecoins, tend to be around payment services, and in particular cross-border payments. And then there's many other use cases around trade payments and paying for bills and one thing and another. So I think we have been really focused on the compliance and just the governance of what we've been building, and increasing, I'll call it the capability across multiple blockchains. The fact that banks are bringing in stable coins, I think is, first of all, it's a recognition that this is an important feature or method of payment and achieving digital transformation of financial services over time. We fully expect at some time that our federal government or the Reserve Bank will bring in a CBDC, but a central blockchain digital currency. But the stable coin, as we see it, will have very specific use cases, and people might at different times use one from the bank, or if we can build ours to have the right marketing imprimatur and governance, then we'll be a major player as well, or in front of potentially the banks which may well have a more restricted use case for their stable coins.
Thanks, Peter. We are starting to run out of time now, so if anyone does have any more questions, please just pop them in your Q&A box, that little speech bubble with a question mark at the bottom of your screen. Question from Joe. Are we expecting to see a Tier 1 partnership with Novatti announced in the immediate future?
Joe, so maybe if I can answer that more practically, we have sales teams in cross-border payments, issuing, acquiring, as an example, immersion. We have very strong business development growth across multiple channels. They're nearly all bringing on either a traditional end merchant or business or strategic partners. So in terms of bringing on strategic partners, if you call them Tier 1, we're always looking to do that. In terms of absolute enterprise level clients, that's not the core focus for most of the business, but we are bringing on a continual flow of new clients.
Thanks, Peter. Just one last one here from Rabia. Can you comment on the impact of inflation and high interest rates and how that might affect Novati's businesses?
So practically with high interest rates, we have a bond. We pay interest at a floating rate, 650 basis points above the bank bill rate. So if interest rates tick up, then we cop that, and we've sort of modelled interest rates going up. And then as they come down, hopefully in later this year or next year, then that'll be to our benefit. I think the bigger issue about inflation is that in some cases we'll be able to lift our prices for services that we offer. And in particular, as I sort of said before on the acquiring business, essentially all of our customers are, or not all of our payments type customers have third-party customers, whether they be other businesses or consumers. And as they lift prices, then we benefit from that lift in prices, because we still get the same percentage just on bigger numbers. So I think that, you know, the way we think about it, inflation is slightly positive for us.
Thanks, Peter. Just one last question here from Sam, and you might need to put some context behind it. Sam asks, is Novatti expecting to benefit from a large influx of international students in the months ahead?
Sam, so yes, so in our, specifically the unit we call China Payments, and we have a related proposition to market called Nova Bill Payments. We have some services that really face those international students, and we've had actually a really large uptick in volume in the last month. I mean, the business grows year on year anyway, but we've had a significant increase in the last month. So I think that the return of the Chinese students, but we're also increasingly facing India and Malaysia and some of the other economies that feed international students to us, it is a really strong positive driver for us.
Excellent. Thank you very much, Peter. We are out of time now. If anyone does have any more questions, please feel free to email them in and we'll get a response from Peter. But on behalf of all Novatti shareholders and those in attendance, Peter, I'd like to thank you for your time today, and we look forward to seeing you again soon.
And all, thank you very much.